If you get your health insurance through Covered California, you're going to want to pay attention to this because Trump's administration is proposing some pretty major changes to the Affordable Care Act, which could increase your premiums, it could change when you can enroll, and change whether you even qualify or not. So in this video, I'll break down the most important proposed rules that will impact the 2 million enrollees on Covered California. And again, don't miss this, especially if you don't want to be surprised by higher premiums, stricter rules, or missed deadlines, which could completely lock you out of coverage. So the result of the first change is that your premium could go up a lot in 2026, and here's why. So most people who buy a marketplace plan or a Covered California plan, they get financial help in the form of a premium tax credit, which helps reduce your monthly premiums based on your income. And back in 2021, these credits were expanded, which not only did this increase the amount of help that people received, but it also made higher income households eligible for this tax credit. I mean, this expansion led to a huge growth in ACA enrollment. I mean, marketplace signups more than doubled from 11 million in 2020 to over 24 million in 2025. But now those expanded premium tax credits, they're set to expire at the end of 2025 unless Congress steps in to actually renew them, which it doesn't seem like they're going to. So what happens if these expanded tax credits don't get extended? Well, the amount that you pay towards your premium, it's gonna go up by a lot. I mean, the federal government is gonna pay less of your premium and you would pay more. For families, I mean, this could mean a 75% increase in your monthly premiums, but really just depending on your income and household size. So don't be surprised if your health insurance premium increases pretty dramatically in 2026 because it will for most people. And I believe that this is going to increase the number of people who opt out of marketplace exchanges like Covered California, and they're going to end up either uninsured, they're going to look for other alternatives like health shares, fixed benefit plans, and other coverage options, which I will cover in other videos. So make sure to subscribe so you can be informed about your options when your premium skyrockets. Now let's dive into another proposed change, one that thankfully has been proposed until 2027. But it's still important to at least be aware of this because it will impact everybody in the near future on Covered California. Originally, there was a plan to shorten the open enrollment period, which is the time when you can renew or change your plan for the upcoming year. And right now, that window runs from November 1st through January 15th. So the proposed change would have cut that window down by 4 weeks, ending enrollment on December 15th instead of January 15th. And this was going to start this coming open enrollment period, but thankfully it's been delayed to 2027. I mean, it's going to be a pretty big deal because November through January, it's a busy season. I mean, people are traveling, they're focused on spending time with their family during the holidays, and many people, they forget to update or renew their plan for the following year. And I mean, a shorter window would have meant missing the deadline, being stuck with the wrong plan or coverage, or maybe even no coverage at all for 2026. But the 2025 Marketplace Integrity Final Rule has officially delayed that by 1 year. So for now, you still have until January 15th of 2026 to enroll, but don't get too comfortable. The change is still coming. And again, subscribe to stay informed. Now on to the third proposed change, which if you're not aware of this one, I mean, you take on the risk of losing your premium tax credits. As of right now, if somebody applies for health insurance through a marketplace like Covered California and hasn't yet filed a tax return, yet they still can say or at least attest that they plan to file. And that attestation to file is usually enough for them to still qualify for a premium tax credit. Under the current rules, they have up to 2 years to actually file their tax return and still remain eligible for those tax credits. But that is about to change. The government is planning to shorten that window from 2 years down to just 1. So in other words, if you don't file your taxes within 1 year, you could lose access to the premium tax credits that make your coverage more affordable. What's not yet clear is whether this rule will require you to have already filed your taxes before you enroll into a health insurance plan, or if you still have some time after you enroll and you just have 1 year to file it within the effective date of your policy. But either way, the main takeaway is the window is getting tighter, and failing to file your taxes on time can now mean losing your eligibility for help with your health insurance. This change could have a pretty big impact, especially on people who they delay filing or they skip a year entirely. But if you rely on a premium tax credit, this makes filing your taxes more important than ever. And on to the next change. So when you apply for health insurance through Covered California or a marketplace exchange in general, in the near future, you're going to need more than just an estimate about your income. As of right now, if the IRS doesn't have any sort of tax data on you, you can simply attest your income. Like you can just say, I expect to make $50,000 this year. And that's usually enough to prove your income and get a premium tax credit. But under a new federal rule, that's no longer going to cut it. The government is tightening the income verification process. I mean, if the IRS doesn't have any tax data for you or income data, tax return data, the exchange, like Covered California, is now going to require a hard proof evidence of your income before you can qualify for any tax credit, which means that you're going to need to upload actual documentation like recent pay stubs or a W-2, maybe other paperwork. And if you can't provide that proof, you could lose eligibility for tax credit. I mean, this is a pretty big deal, especially for people who are self-employed, gig workers, or those with unpredictable income. So get your documents in order, because soon, if you can't prove what you earn, you might not qualify for tax credits. And again, subscribe to stay informed, because there are more changes coming and you don't want to be caught off guard. Now on to the proposed federal rule that is sparking debate all across the US, but especially in California, since it's going to affect the most people here in California. As of right now, deferred action for childhood arrivals, also known as DACA recipients, are considered lawfully present for the purpose of enrolling into a marketplace plan. And under a temporary policy change made by the Biden administration, they're also eligible for a premium tax credit, but that could be reversed in 2026. Under new proposed rules, DACA recipients may be once again excluded, not just from receiving financial help, but possibly from marketplace enrollment altogether. And that's going to mean no more tax credits for them, possibly even lose access to a health plan through an exchange altogether. This change is going to roll back pretty recent efforts to expand access for dreamers or undocumented immigrants who they're brought to the US as children. And I mean, it could leave a lot of them without access to health insurance through the marketplace, which it's going to force a lot of them to go uninsured. This isn't final yet, but if the rule is approved, it will go into effect in 2026. More changes are on the way, so if you want to stay ahead and avoid surprises, hit subscribe and stay informed.